begin. Just going to move this over here. And all right. So, hope everybody's doing okay. We'll might as well start. Today we're going to talk about sort of trusts for residences and options to purchase, things like that. And of course, as we always do on Thursday, open up the floor to other questions that people might have generally. Yeah, so that's where we'll start. Any opening remarks before I begin? Or are we good to go? I will begin. So jump in with any questions as we go. So here we have James Smith, and I'm going to show you the two sort of classic trusts for residences, one for a surviving spouse and another for kids. So let's say we're in a second marriage here, and the client wants to put the home in a trust for the surviving spouse rather than give it to them outright. So this is a, that's a good point, Michaela. Michaela's like, maybe you should share your screen. That's going to make things a lot better. Thanks. So this is James Smith. We want to create a trust for the home. So that's going to be an initial gift. So we're going to drag the home and drop it into the initial gift section and select the trust option. So the beneficiary is going to be I don't know who the spouse is. I think it's Sarah, if I'm not mistaken. So Sarah is the spouse. The asset we're putting in trust is the home, obviously. Now, here's the section where we could appoint different trustees than the executors to monitor and maintain this home if we wanted to. Let's leave that aside for a second. And then we'll go to termination of use. So this is where you would take the instructions from the client. We might want to hold it until the spouse dies. We might want to, so let me just go back to show you what I did there. I would just pick death of the beneficiary, pick the beneficiaries whose death is going to terminate the trust, and go done. Then we're going to add other options for the termination of this trust. So we could do age, but that's rarely a situation for a spouse. If the spouse is going to be responsible for some of the expenses, then maybe if they stopped paying the expenses, we would trigger the sale of the home at that point. So let's put that in. Do we want to say that, and typically you would say yes. Do we want to say, okay, if the spouse says, I don't want to live here anymore, that would terminate the trust as well. So we would put agreement. We don't need, this is more if there's more than one person who has to agree. So you can just say done, agreement of purchase of beneficiary. The last options, trustee's discretion. So do we want the trustee to be able to sell the property without the consent and terminate the trust at any point? Maybe we don't want that. But maybe we want to set a limit, a time limit on how long they can live there. That would be other. For now, it's other. And let's say it's an anniversary. They can live there for 3 years. So this I would say, and this is going to be better in the new version, but this would read the 3rd anniversary of my death. So you would change testator to my, and that's how it would print out in the will, the date of the 3rd anniversary of my death. That's what I would put in there if I wanted a time-limited trust. And you could pick earliest or latest, right? So typically it's the earliest, but you could always pick latest. Conditions. So if we wanted to set some sort of condition up for the trust before we would establish the trust, then we would put that in the conditions tab and enter the description. An example might be for, as long as they waive their rights under the SLRA or something like that, I don't know, or waive their rights under a marriage agreement or some sort of condition like that. So I'll just maybe show, let's figure out how that's going to show. So waiver of rights under marriage contract. Okay. That's going to print out in the will just the way we've typed it, and it's going to highlight it because it's going to require some drafting. And then for every trust for a residence, you have the options to put who's going to pay the expenses. So you can move them all one side or the other just by clicking this box. So if I click here, then I'm going to put 100% responsibility on the beneficiary. Here, 100% on the estate. So that's what we're doing. So let's say, and you can have, of course, say, okay, the estate's going to be responsible for the property taxes, the insurance, the mortgage, but the beneficiary is responsible for the utilities, as an example. So, and you can add here other expenses that aren't listed here. So if there's other special expenses, like, I don't know, condo fees or something else, yard maintenance that you want to specifically identify, you could just go add, yard maintenance, go add, and then assign who's going to be responsible for the yard maintenance, the estate or the beneficiary. Then we have to worry about, okay, if the estate is responsible for some assets, for some expenses, here they are, who's going to pay it? Is it going to be the residue, or are we going to use a separate fund? The residue is quite simple. And what it'll check for, so it'll check if I pick residue and the residue is immediately distributable, then I'm going to, yes, you could check 50%, et cetera, of the expenses, Mark, just so you know. Then you can, it'll automatically deduct it from the residue, but it will warn you if there's no residue left. In other words, if it's immediately distributable and you're holding it for 5 years, well, then we've got a problem. So eState will warn you about that. But let's try a separate fund. So let's do that and go add. So just to demonstrate here, let's say we wanted half the mortgage paid by the beneficiary. You can do a sliding scale there. So let's go separate fund, add the provisions for the separate fund. So what I would typically go to is, you could say if there's no money in the residue, but I typically just go to an amount and I say, okay, it's going to be, the amount set is either going to be a fixed amount that we're going to fix now in the will, or it's going to be up to the trustee to figure out how much we should set aside for the special fund. That's what I typically pick, unless we know exactly how much money is going to be necessary. So that's what we would do there. And then we have a few options for replacement of property. So replacement property. So if we want this trust to apply not only to this home right now, but any replacement property, as well as allowing the purchase of a replacement property. So in other words, allowing the trustee before the end of the trust to sell that property, buy a replacement property. Do we want that to allow that? Yes or no? And if we check no, we won't allow it. And if we check yes, we will allow it. The next question is, do we need the beneficiary's consent to do that? If you say no, then it will be simply up to the house trustee to do it. Otherwise, the beneficiary's consent is required. And then we've got to deal with what happens if we sell the property for $1 million and we only buy a replacement property for $500,000. What happens to those, what we call excess proceeds? And again, you could do those, you could have them just fall into the residue if you want the residuary beneficiaries to receive the benefit of that, or you can set up a special distribution. So, and let me just demonstrate how that works. So if I pick special distribution, this is like creating a new balance of the estate gift for the excess proceeds. So I can either do it absolute or trust. I can say, okay, that I want to go, any excess money is going to the children, absolutely. And I'm going to have 50% of it going to the children. And then I'm going to add another 50% going to charity. So I'm going to, I don't know, pick some charity, the World Fund, for the other 50%. And that's how you would create. So there'll be a special provision in the will, which I'll show you, that says, okay, if there are excess proceeds, deal with them over here. And it'll say split it 50-50 between children and World Fund. So we're building this in so that it'll be available for gift overs in every option. But right now, it's just stuck in here. And but I just want you to know that that's how the gift overs are going to work, where you'll want to make specific gift overs. So that's the replacement issue. And then we have the options to purchase. So in this case, you might not give the spouse the option to purchase. But if you wanted to give the beneficiary the option to purchase, you could go click on yes. The first thing, resolution. That's if there's more than one beneficiary who has the option to purchase. And if there was more than one beneficiary, in this case, the spouse is the sole beneficiary, so there's no other people who have the right to buy it. But you could pick either equally. So if two people want to buy it, they have to buy it equally. Or an order of priority, and I'll show you how that works, or random selection. And we welcome your comments on any other resolution you might want to think about. I know somebody mentioned to me, and I think, I don't know who it was, but said, maybe we want a highest bidder type option if there's more than one. So we're going to build that in as well. But in this case, it doesn't matter because there's only one person with an option. Purchase price. Are we going to fix? Sometimes clients say, look, I don't want them to pay fair market value. I'm going to pick a price that's probably lower than its fair market value, but I want to pick the price that they can buy it at. That's what fixed amount was. Usually we use fair market value. Discount for partial interest. So what if this guy ends up James only owns 75% of this home, they own it as tenants in common, then is there going to be a discount for the partial interest? In other words, what that means is 75% of the whole is not necessarily equal to 75% of the value, because it's a minority interest, which you can't sell and you can't necessarily force anybody. So it actually in a valuation may have less value than a straight multiplication of the interest times the value. So that's what discount for partial interest is. I typically don't check that off. Now, how are we going to fix the fair market value? Typically, we use appraisals, although we're going to build in a bunch of different options there. The method, do you want a certified real estate valuator, or do you want some other letter of opinion or something like that? Who's picking the method of determination? Is it going to be the trustees or the appraisers? Who's going to pick the appraisers? It's going to be the trustees. And how many appraisals are they going to get? Let's say 2. If you pick more than one, it's going to ask you for a resolution of that. Do you want an average of those, or do you want some other option? I typically take an average. And who's paying for those valuations? I typically say the residue should pay that, but you could pick you could have the expense fund or beneficiaries or some other resolution there. Now, when we let them buy it, are we going to discount for notional commission, which is not unusual? And if so, what's the commission amount? Well, I'm going to deduct 4% for the value of the notional commission. Can the beneficiary then, if they don't like the appraisals, can they get their own? That's what this option is. And if so, how quickly do they have to get their own? And who's going to pay for those? The beneficiary is going to pay, or the residue is going to pay? Typically, the beneficiary would pay for those. They want to get another appraisal, let them pay. The next thing is the timing. Do we want option to purchase? Let's say you've got 19 days after you know the value as to whether you want to buy it. And then you got to close within 20 days. Now, these are just whatever you want to put in there. And then we have the same issue about proceeds distribution. So do we want the proceeds of the option to purchase to go just to the residue, or do we want, again, a special distribution of the proceeds? So that's what you would pick there. Same as I showed you with the excess proceeds. And then go save. And lastly, we need to deal with a gift over. If the spouse is not alive, what do we want? Well, we just want it probably to go to the residue. So I'm just going to go, there's a question about the notional commission. The idea of the notional commission is you say, okay, if we're selling it, if this person has the right to buy it without it going to the market, then the estate doesn't have to pay a listing agent. And so the estate is saving commission on that by having this person buy it directly, this option to purchase. That's why you would deduct an amount for notional commission. So that's what we're talking about there. And you'd put in a percentage. And then we go add, and that's how you build a home trust for a spouse. I'm just going to open the floor before I go to the second type of trust, which is a trust for children, home trust, just wanted to see if anybody had questions.
Quick question, Jordy.
Sure.
It's Blake here.
Hey, Blake.
Well, yeah, I guess you know that, don't you?
Yeah, I can see, yeah.
Does the software, your software, give a warning? I'm thinking of Part 5 of the Family Law Act, where the spouse has an election to take 50% or take what's given to him or her under the will, or 50% of the net. Because if it's a trust asset, it's not really
correct.
Right.
They might elect. If that was all you were giving them, they might elect. There isn't a warning yet, because what we have to do is figure out, I mean, we could put a warning every time you don't give everything to the spouse. That we could probably do that. That's a simple one. We don't know if we want to do that, or we want to sort of calculate it based on what they're getting, but we probably can't do that. So probably a warning when they're not getting everything absolutely would be a good one. So I'm going to add that to our list, Blake. Thanks.
Thank you.
So let's just move to the second scenario. And this is a more typical, so I'm going to show you a kid's trust. And then, so here we have the home. We want to let the kids live in there for a period of time because they're young. Okay, let's just say that, as that's the example we're going to use. So we're going to use a trust for them, and we're going to use a class gift. We're going to say children. Okay, so the children, who can use the house? Well, the children can use the home. Trustees, I'm going to skip that. When is this going to terminate? Well, this is one where we might use age of the beneficiary. We might say, okay, when all of the beneficiaries, when all the kids have hit 30, then you can't let them live there anymore. Or when the first hits 30. I mean, however you want to do it. Usually I do when all, so that I know, I set this at 30 or 25 and say, okay, once everyone's 25, get out of the house. So you can do that. The other one I would typically always build in is this idea of a trustee's discretion. So if the trustee says, you know what, yes, the kids are only 23, but it doesn't make sense to keep this home anymore, then you can sell it. So those are the two I typically build in for a children's trust. And I would typically have the estate paying the expenses. If I know that there's a trust already for those kids, then the way it will print it out is it'll say, okay, use the money in the trusts that are set aside for my children to pay the expenses. And you'd use the same sort of options to purchase or replacement if you wanted to do that. In this example, I'm not going to use either of those. And if there are no kids alive, at the end of the day, when it is sold, I want it to just fall into the residue. That would be sort of the typical, this is your typical young children's trust for the home. Children, termination on age and trustee's discretion, the earliest. I'd have the estate paying all the expenses out of the residue. I might say allow them to buy a replacement property if they want. I wouldn't have an option to purchase necessarily. And I just have it fall into the residue. So that's that one. Let me just show you how I would do it with a cottage. So pretend the children are all adults and we're doing a cottage trust for them. Okay. So I drag the cottage in there and I'd say trust. And I'm going to say, okay, who are the people with who I want to have access to this? So it would be Samantha and let's just say Chloe are the two kids. Now, why am I using the kids' names in this case? Is there a reason not to include a cash gift with the house trust to cover expenses? That would be the special fund. It's just more administration. You got to set up a separate trust account to manage that money, keep a separate set of accounts. That's why you have to figure out an amount. Then you got to deal with what happens if there's excess. That's why I would, might not necessarily do one. But I can come back to that, Chris, in a second. So why am I picking the children's names specifically here? Well, because the client is thinking about using an order of priority for the option to purchase. I want Cleo to have first option and then Samantha, okay? So if you're gonna do that, you can't just use a class gift at this point anyway. You have to name them specifically, okay? So let's say these are the two kids and we wanna let both of them use it. So I would click on Use By and then add Cleo and Samantha to be able to use it. termination. I'm going to say, you know, when both of the beneficiaries are, if both of them die, I want it to terminate. And let's say, you know, age, let's say other, when the, you know, let's give them, you know, 5 years, the 5th anniversary of my death. This is going to be easier in the new version, but so I'm going to say, okay, if they all die, it terminates, or or 5 years. Who's paying the expenses? I don't. You can divvy things up the way you want it, you know, and then figure out. In this case, you would probably have a separate fund. Why? Because in likelihood, if they're adults, we've given the money to them immediately. There's no trusts in the will held on to pay these expenses, so we'll probably need a special fund for that. And I would typically say, as I say, amount, trustee's discretion. Do I want to? No, I don't want to buy a replacement cottage. Do I want an option to purchase? Yes. And I'll just show you. So here we have to resolve it. So either if both want to buy it, they buy it equally, or I can give them an order of priority. So I can say, you know what, I want Cleo first. How do I do that? Because it'll list it in this order. If you click on these the little 6 buttons there, that's how you move things. So you can click on it, hold, and drag it above. Now I want Samantha first. Click on that and drag it above. So I can move the order. That's how you would do that. So now it's going to say Cleo first, then Samantha. They can buy it at fair market value. I don't know, 3 appraisals. Let's just do simple. Let's deduct 2% for notional commission. Let's say the beneficiaries can't get their own. Let's say 20 days and close within 20 days. I don't know. And then the proceeds go to the residue. That probably makes sense. And the gift over, if everyone's gone, it goes to the residue, or they don't, or it gets sold to a third party. It's going to the residue. Pretty typical sort of trust for children. So let me just generate these and open the floor to questions and see if anybody has questions about those kinds of different home trusts.
This would not be a situation where you'd put it, you'd use a secondary will then, I take it, Jordy.
Well, you might use a secondary will if, let's say, the property was in land titles qualified, right? Or there's a chance that the home is going to be held on a resulting trust because you're going to name one kid as a joint owner on it, and they're going to sign a trust declaration. And so, yeah, you could use multiple wills. I'm just doing it because it's faster to do single wills, but yeah, there's no reason why, you know, you wouldn't do the exact same kind of thing and use multiple wills. And if it ended up that the cottage wasn't LTQ, then, well, it would be in the primary will. And if it was LTQ, it'd be in the secondary will. So, and the wills have the same provision in both. So that's the good point. Because we often don't know which will it's going to be in until the person dies, because it could be held on a resulting trust. So here's I'll just show you this. This is the will. And if I go down to the trust for residences, so this was the one with the spouse, and it highlights this. So this is typically, if it's important, here's where you'd put the pin. We don't have any place yet to put that into the system, but it is something we can do pretty simply. So, soon maybe we'll have it check automatically. That'd be great. I doubt it though. And then we just have this highlighted just because remember we talked about replacement property. So it would be if they still own 123, but also if they buy another property during their lifetime and sell this one and buy a similar one, it's going to apply to that property as well. The home beneficiary is Sarah. The earliest of, we have the date of death. We by default say she's got 60 days to pay the expenses. There's a footnote there. So if you go to that, it'll tell you what that footnote is. And it'll say by default period is 60 days. Okay, let me just click back on it. It'll take me back to that. So you could change that if you wanted. We also have other periods, the date when the home beneficiary advises my trustee that she does not wish the property held for her. and the date of the 3rd anniversary of my death. So that's what we typed in. And let the trustee use the home, or let the spouse use the home. Here's the payment of expenses. So the home beneficiary is responsible for 100% of ordinary repairs, utilities, and yard maintenance, and 50% of the mortgage, and the estate is paying the rest. And it says set up a separate fund, and here's how the fund works, and talks about, you know, if there's excess income, because you're holding it for more than 21 years, it goes to the residue, and it just warns you about that. So you may want to check that. By default, the accumulations just has it falling into the residue. And then says that any remaining amount is going to the into the residuary, to the residue. This is the right to sell property, sell it before and buy a replacement property. Then it says any proceeds of sale that are excess, deal with it here. And so what it does is send you to a different paragraph. So it says deal with it in accordance with that paragraph. So if I go there, you'll see here's what happens to the home excess sale proceeds. It gets divided 50% to my children, 50% to the World Fund. So that's how we deal with that. So that's sort of how the trust works. And what I'm trying to do, just so you know, I'm going to be creating an annotated will for everyone to get a little more comfortable with the way our templates work and the language that comes standard. So that might make people just feel a little bit better. And I welcome your comments on whether you think that is a good idea. But I just find that some people are not yet sure what's in our templates and not used to it. So that's what we're going to work on. And then here's the option to purchase. I believe this was the cottage, right? And was giving Samantha, remember this was the one with the 2 kids who had the right to buy the cottage. So we're going to get to buy it first, and Cleo's the first optionee and how long she has. And then we have, you know, et cetera. If she doesn't exercise, then we've got the second optionee, the second option here, and how it goes when they sell it and all of those things. So that's how trusts for residences work. If I set up, let me just deal with how are future tax post-disposition at death to be handled. So it will warn you, eState will warn you that there's a tax issue. For example, depending on who the residuary beneficiaries are, let's just see in our case. Yeah, so in this case, the spouse is not the sole beneficiary of the home. We have a trust for the spouse, and it can end prior to death, and we don't have a qualifying spousal trust for the proceeds. So we're just warning you that, look, when the person dies, that's going to come out of the estate. That's going to come out of the proceeds of the sale of the home. But it does warn you about that. Here's the warning just to show you an example. It's saying, hold on a second. You've made the expenses paid out of the residue, and you better just consider in the descendants only scenario, there may not be any money in the residue because it's immediately distributable. So just about that. If I set up an insurance trust and set up a trust for the residue, trust, can they commingle? Yes, there's a commingle provision in the, sorry, I just read the chat, maybe you guys didn't. The question is where you have a trust set up for insurance that says deal with it on the same terms as the residue of my will. And the residue just says deal with it for my children. There's a commingling, let me just see if I can call that up here. Mingling, here it is. So it talks about, oops, keep active. Sorry about that. You can commingle trust assets from separate testamentary trusts where the trustees, beneficiaries, and terms are substantially the same, such as those in a life insurance trust. So there you go. The power is there. That assumes that it's one of those that says same as the residue. So let me open up, maybe we can unmute everybody and just see if people had questions about, first of all, we'll just deal with the residence trusts and see if anybody's used eState to prepare one. Anybody out there? I use them pretty regularly, to be honest with you. Kayla, I don't know how to unmute. I don't know if everybody can just unmute themselves, but I use the home trust for children very regularly, where I've got younger kids and I just want to build in a trust provision. Well, people say to me, well, you don't need it. You've got the trust for the kids, right? What's the big deal? This is the big deal. And I always try to plan for the disaster. So one kid wants to stay in the home and the trustee thinks that's a good idea. And the other kid has a falling out with the trustee and says, you're disadvantaging me. You're letting one of my sibling live in the home and not selling it. And it's not an even hand. And it's not only not an even hand, but it's just, you're dealing with an asset improperly. So that's why I would do it. Now, is that going to happen regularly? Well, maybe not, but why not build in that kind of provision? That's the theory behind it. It also is clear to the trustee, I can do this and how to do it. So that is that. Any questions? Couldn't have been that clear. There must be questions. Anybody anybody do home trusts or trusts for cottages or trusts, home trusts for spouses? Anybody do that regularly?
I do. It's Teresa. Hi, Jordan.
Hi, Teresa.
I'm glad that you shared that because, yeah, I used to have to draft them,
Right.
with great difficulty. So that's great.
Yeah, it can do, as you can see, it can do pretty complicated ones. You might not need all those different options.
Mm-hmm.
And we also welcome, so, that's an area where I have on my list that I need to go over. And as I said, we're going to add certain other options in there that people want. So let us know, I always, give it to the highest bidder or whatever. So let us know about that. It's really important that we can build it out so that we want to do as little drafting as necessary. And so, please, your feedback would be really welcome.
Okay.
Anybody else?
I have a question, Jordy. This is Miriam.
Sure.
So would you consider a home trust if the children are very young, like toddlers, for example?
Yeah.
And there's going to be a guardian involved?
Yes.
What's the better option, or what would be your advice to the client? Should the children move in with the guardian, especially if there's a generous clause, or?
Yeah. So what you would see in here, and I don't know if any of the children in my little example were young, but you would see if there were young children here, and I was doing a home trust, it would say let the guardians live. Yeah, here it is. So allowing the guardians to live in the home. I typically ask my client, is there any chance that the guardians, that you'd want the kids to be able to stay in the home if the trustee thought it was a good idea, or that the guardians would move in with the kids? And if they say, well, there's going to be none of that because the guardian's going to live in the US and they're never going to move here or whatever, then maybe I'd say, okay, then you don't need a home trust. If there's any possibility that the guardian might move in, that's when I would want that. I'd want to use a home trust. I hope that made sense.
Yes, thank you.
Yeah, so Shannon, you asked about termination events. So there's a whole bunch that out there. Just as an example, let me just go back to the surviving spouse. Here's the termination events. So we have that, but we also have, I don't know why we don't have remarriage. Oh, you know what? Sarah's not the spouse. That's the problem. Let me just go and find out who the spouse is. Samantha. Okay, so if I'd put Samantha in there, it's always good to know your client. So Samantha Smith. Now, if I go add cohabitation and remarriage, it doesn't ask for that if it's not a spouse. Most people wouldn't care. And then it warns me, oh, you've picked the wrong, you picked the death of a beneficiary is not even a beneficiary. So we want to pick Samantha. So I switched the name. Okay. Yep. A few more minutes. Anybody have any other questions? I'm happy to stick around. So fire away.
Hi, Jordan. I have a question.
Sure.
So if you're setting up a spousal trust,
Yeah.
and the spouse is like, how do you deal with the risk that the spouse may elect for the division of the net family property?
Yeah. Well, I mean, you would say to this client, and per Blake's suggestion, there's going to be a warning if you try to do that, and it'll say, make sure you just canvass the client the possibility of a FLA election. I mean, you say to the client, do you understand that? You can, that we're doing a trust, but there is this possibility that the spouse may elect for a cash out, in which case he or she's deemed to have predeceased you. So the trust provisions would just kick in as if she had died before you, which typically says it goes to the kids. So that's what would happen. And there's nothing we can do to prevent that if you want to use a trust. And there's nothing you can do to prevent it. Whatever you do, a spouse is always entitled to an election subject to a marriage agreement. So you could say to the client, if you really want this, go back to your spouse and tell them you need a marriage contract.
Okay, thank you.
Yep. And we can add that. We can actually add that advisor alert in the next few days.
Jordy, can you just review the house trust for spouse to ensure that it maintains the principal residence exemption, just the checklist of things, please?
Right. So the what you need to do then is if we have it terminating on any of these events, it's going to be a problem, because it's got to be basically a qualifying spousal trust. So you right, obviously a trust that ends on cohabitation, remarriage, a date prior to the death, is not a qualifying spousal trust. So how would you do it so it's a qualifying spousal trust? I would say this. I would say you could do all these events, but then you have to say that on the death, rather than the residue, you need to create a spousal trust for the proceeds of that, of that home trust, or else it's going to trigger capital gains. So as long as you deal with the proceeds in a qualifying spousal trust, then you'd be okay on the principal residence exemption.
Jordy, it's Teresa.
Yes.
So on the cottage trust, I couldn't remember if your precedent had the requirement that they enter into a co-tenancy agreement.
No. So that's something that we would build in probably as a condition.
Yeah.
But that's an excellent point, and we'll make a note of that. Add that as a.
Yeah.
Yeah. And that would be if you chose tenants in common, right? So you'd say, okay, you get it as tenants in common if both of you want it, or if more than one of you wants it, but it's conditional on you entering into a co-tenancy agreement.
Right. That's typically how I draft mine, because I don't want to do all the
idea.
details in the cottage trust.
Great idea. And we're going to add that. I know Michaela's here. We're going to add that to our to-do list.
Great.
It's a great one. That's exactly the kind of feedback we need, and just be patient with us as we try to work through all those ones. I've been testing the new app, the new version of the template, and it generates in 3.4 seconds, which is going to be good. And hopefully in the next little while, we'll have that out to everybody. There was something I was going to ask. Let me take a poll. I'm thinking of making everything full justification for the right margin. Any objections to that from this group?
No, thank you for that. I usually re-justify it all, so that
seems to be everybody's feedback. Mark, you want it to be just hanging. I understand it. So we're working on a way to make that an option. It seems that the majority of people like the idea of full justification.
As part of the options, may I suggest that as part of the setup of the document, we have options presented for
Yes.
things like font and justification, etc.
It is font and size and all of those and margins. Those are and are already in there. We're just trying to figure out the justification being an option. So it will be for sure. It's just a matter of whether it will be in the initial release or not. But yeah, so that's good. We're also adding in whether you want the beneficiaries' names bolded and capitalized, or just bolded or not. So we're working on little things like that that just might make it look more like yours. Blake wants to know when the initial release. I cannot say. We're aiming. I promised. I haven't promised, but I've said this was supposed to come out in the spring, and by my calculation, that's the 21st of June. So don't hold me to it. But I'm sure Nick is going to get mad at me for even saying anything. He told me not. I remember him saying to me, "Jordy, don't mention anything." Couldn't resist. Good. Well, thanks everybody. I like to keep it to 45 minutes, but you know how to get at us and how to access our resources. So please reach out to us with any other questions and any suggestions for topics for next week. We have a few, but we wanted to make this one was a priority because people mentioned it. So just let me know. And we thank you again for your support, everybody. And we'll see you again. Take care.